The broadcast is now starting. All attendees are in listen-only mode.
Hello and welcome to this special midweek webinar. I am Devarsh and I am joined by my colleague Subash for this midweek market outlook. So, as my colleague Subash will point out, we are stuck in a small range for quite a while after going through a big correction, and we are now waiting for important cues to show their head. So, internationally, we know that the US, Nasdaq, and the S&P, they had the biggest four-day rally of 2024 on softer than expected producer price data. So now the market is waiting for Federal Reserve to commence its interest rate cuts from September. The July producer price index was much moderate than what market were expecting. Now there are two important events which are going to come up. First is the consumer price figures for July, which will be released in the evening today, and then the July month retail sales data will be released tomorrow. Indian markets are closed tomorrow, so we will react to these two important events on Friday morning. So that will be the important short-term data points to monitor. Now, result season is getting over today, and once we go through this result season, more or less the results are as per the market expectations. So the most important thing is now to follow the global cues and the technical levels. I'll hand it over to my colleague Subash to share his views from the charts perspective. Over to you, Subash.
Yeah, am I audible?
Yes, you are.
Okay. Yeah, so good evening, everyone. I'll be giving a brief technical view on the markets. So early last week, the Nifty broke the previous lows of 24,210 and 24,074. So the short-term trend has turned down. Now, after testing the 50-day SMA, we did see a bounce back, but the Nifty found resistance near the 20-day SMA, and again it has come down in the last two sessions. So now the Nifty is stuck in a trading range between 24,000 to 24,500, and we'll have to see how the global cues behave in the next two sessions, and depending on that, the markets are likely to take further direction. Broad market indices like mid cap and small cap too have shown some weakness in the last two sessions, but they have not reversed the trend, the uptrend. So a cautious approach is warranted, and we can know the trend in the next few sessions once the global cues are discovered. Small cap index also is similar to the mid cap index. It has shown some minor weakness, but the trend is still up. And coming to the sectors, most of the sectors are showing weakness except for IT. IT is the only sector which is showing some positive. And even pharma, which was showing strength of late, is now showing some weakness. So cautious approach is warranted. Our strategy is to go slow on fresh positions till we see some signs of strength. Now that's all from my side. Now over to Devarsh. Okay.
Subash, we are not able to hear you.
I thought you said that you were able to hear me, so.
Now it is audible. Go ahead.
So I was saying that market Nifty is in a downtrend and it did bounce back from the 50-day SMA, but over the last few sessions it was finding resistance near the 20-day SMA and it has come down. So now the Nifty is stuck between a trading range between 24,000 and 24,500. So the global cues in the next few sessions are likely to determine the trend of the Indian markets in the coming days. So we recommend a wait and watch approach till we see signs of strength or weakness. So that is our strategy for the coming sessions.
Yeah, you can share the Bank Nifty outlook also.
Yeah, Bank Nifty is also in a trading range between 49,700 to 50,800. It is now at the lower end of the range. So a break close below 49,700 is likely to trigger more weakness. Overall, daily chart pattern is looking weak actually because it is below the 50-day SMA and the 20-day SMA. In fact, there has been a negative crossover. The 20-day SMA has gone below the 50-day SMA, and RSI also is in decline mode. So it looks like there are more chances of downside.
So we are now open for questions. If you have any question, you can put it on the chat box and we'll try to answer them as much as possible. So the summary is that we are waiting for global cues. We have corrected from higher levels and now we are trading near the support. If the global cues are negative, then we are likely to break this support and head towards the 24,000 kind of support level. And if the global cues are positive, back of expected interest rate cut in US, then we may go back into the broad gap area, which is there in the Nifty. And if we are able to close this gap and surpass the initial hurdles, we will head towards the all-time highs. So that is the outlook from our side. We'll connect again on the weekly files and reports for further outlook. Thank you. And that brings us to the end of this webinar.